Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Ben BLB. Remember, new shows are posted every Monday and Thursday. You can subscribe to our show on iTunes and YouTube. If you're enjoying the show, please leave us a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Now, today I spoke with Ben. He's an independent trader at BLB Capital. Ben has a very inspiring backstory on how he trained himself to become a full-time, successful futures trader. Ben received a GED, then started a cleaning company, worked in construction, had some health issues that caused him to leave the workforce, and then he began educating himself on futures markets. He discusses his battle with learning how to trade futures, creating his own order book on his charts, reasons he chooses to scalp crude oil using advanced order flow and market mapping. Ben gives us details on how he prepares and executes his trades. We discussed his process for growing his contract size, trading psychology, trading rules, and what he thinks about Twitter for new traders. Without further ado, let me take you right to that interview with Ben. Ben, thanks for joining me today.
Anthony, thanks for having me, man.
It's great to have you on the show, Ben. Now, you're a passionate guy about trading and life, and I really love that about you. You didn't grow up in the futures trading industry. I know that you got a GED, you started a cleaning company, worked in construction. You actually had some health issues that actually caused you to leave the workforce for a bit, and then you began your career trading. So it's very interesting how it all began for you. So could you give us that story and how you ended up finding your way to futures?
Yeah, sure. So out of high school, like I said, I got a GED. I wasn't, the best kid in high school, and I never wanted to work for anyone. So I started a cleaning company, cleaning office buildings and stuff like that. Did pretty well. Started doing construction with my stepfather, so I ended up selling the cleaning company. Worked with him for about 10 years. Then in 2011, 12, I had an injury which put me out of construction and on the bench. So I had to look for other means of income. And basically I had a friend of mine that was trading stocks, and I started messing with that. And I realized I needed a lot of capital to make any money. So he said, why don't you try futures? So we messed around with a bunch of different futures options. And then I ended up meeting a guy that took me on a further journey.
So no trading or financial background, nobody in your family, nobody guiding you into trading, just a friend. So what I'm curious about, what are some of the specific things you did, and maybe some things that were taught to you by your friend or any mentors that you encountered along the way, educating you on trading?
So when I first hooked up with him, he was trading part-time stocks, and he would do like stuff that the kids were into, Crocs, Abercrombie and Fitch. That was kind of his strategy. And he was still working full time, but it was something I figured I could do from home, on my phone, whatever the case may be at the time. And he just showed me, when something's hot, the kids are into it, you buy it. When it falls off and the kids aren't using it no more, you get rid of it. And that's a pretty good strategy for stocks to this day. So that's where that came in on the stock stuff.
So talk to us about the futures side of things. How did you educate yourself on futures trading?
So futures, I found out that because he dabbled in futures a little bit, and he showed me that you didn't need a lot of, you know, leverage. Basically, you could trade a contract on the ES for $500 or crude oil for 1,000. So it's like, okay, that makes more sense to me. I don't have to, put 50 to $100,000 into this. I can play around with 10, 20,000 and hopefully make money. And so I dabbled in that for about a good year, uh, on and off, just going back and forth from. I just did a ton of research online, and I came into the educator side of the business like everyone else did.
What were some of the specific things that you were reading or watching videos on that started to help you, basically mold yourself into a futures trader?
Well, what I didn't get at first was I wasn't aware of how the industry is as far as the dark side of it, with everybody looking to make a buck from everything else besides trading. So I was blind to that, and that's something a lot of people go through still. So you go through YouTube, you go down that YouTube wormhole. So I ended up at a place called School of Trade, and everything shows him making all this money, make $2,000 to $5,000 a day, little, you know, money required. They teach you everything you need to know, and that's it. And it was $5,000 for the course. So I had like 2,500 I put aside for any education. I offered that to him. He said, fine, I'll take it. And I started my journey with him.
So was that helpful to you? What did that teach you? And where'd you go from there?
Well, I must admit, like, he did have general knowledge at the time to me because I didn't know anything. So everything to me sounded like this guy knew everything he was talking about was legit. So, anything about leverage or margin, or actually, just how the market works, the information was solid. So to me, I kind of trusted it and didn't think anything of it until, the chatter started. Uh, every trade was a winner. My trades were losers, and I was doing the same thing. Um, he was putting stuff on a spreadsheet. He had a bunch of different accounts, so he would show the winning account and not the losing account. So there's a bunch of tricks those guys use to deceive people. So what I did is we got out of there. There was a couple guys that came with me. I started my own little chat room for free, didn't charge anybody. It was just a group of people that kind of escaped from school trade.
So what you did learn was basically the basics about futures trading. And from there, you took those basics, started a chat room with other traders that were excited about trading, wanted to learn about trading. So talk to us about what your mindset was from there, and take us to current day. I know that a lot of what your strategy now is focused on is order flow and market mapping. So how did you start getting into that? And what were the tools and maybe the people that taught you about that aspect of your strategy?
I ended up meeting a guy that was a bond trader in the city. Somebody introduced me to him, and he said, come on in for a few weeks and sit next to me. Don't talk, don't look at me. Just watch. Don't ask questions. So I did that for a couple weeks, and then there's just domes everywhere. There's no charts. So I'm like thinking the whole time, like, I'm doing this all wrong, because everything you learn in the beginning is lines on a chart, moving averages, all the basic stuff that everybody else uses. But meanwhile, the people that are making the real money are the ones that are actually doing the order flow and putting the real orders in. So, that dawned on me. So once I learned that, I couldn't do what he was doing. So I had to, I can't read a book. I have to watch the movie if you want to make it simple like that. So I had to turn into something visual.
Yeah, as I think most traders are very visual. I think that's why so many people they choose technical analysis versus fundamental analysis. They like to see the chart. They like to see, what's happening, and you like to see the order flow. But talk to me about some of the specific things that you were taught in those moments next to that bond trader, and then and how you accelerated it on your own, and then basically building your own book of ideas, and then eventually taking that to your trading.
Yeah, so at the time I was really dumbed down. I was getting into Fibonacci stuff and I started discovering rotations and all that stuff has its purpose, but I kept battling myself on why does it stop there? Why did, price just doesn't stop for no reason. So what he showed me was basically how the order book works. You have order pressure on top, order pressure below, how bids are, bought into the offer, and just basically the mechanics of the book, that you buy from someone selling it and you sell to someone that wants to buy it. And that all made sense to me. So he showed me a few things, a couple drills to do, these like 1 to 3 tick drills. And for the life of me, I couldn't do it. I couldn't figure it out. There was too many numbers flying up and down. So I started creating my own kind of order book on the chart.
So you said you're creating your own order book on the chart. Can you give us a little bit more details on that?
Well, I took the dome and I dissected it, and I said, okay, you have offers above, bids below. These people want to buy, these people want to sell. This amount of people are looking to sell, this amount of people are looking to buy. So what's causing the fluctuation in price? Why does price move then if it's just that easy? So I dialed it down into 4 components. You have passive resting orders and aggressive filled orders. So I created a chart with just that on it, and I started studying it 16 hours a day, 18 hours a day, nonstop, all day, taking trades, no kind of methodology, no strategy. And I started discovering that where I thought was the good spot to get long or short, these places they were just taking everybody's stops at these specific spots. So that's how I started to put it together. Like you want to be on the opposite side of how you think you're supposed to trade.
What I'm impressed with is that you identified early on that you had to make it personal to you, right? I mean, you had to make it to where you looked at the screen and it made sense to you for you to be able to pull the trigger.
Yeah, because that's the only way to do it, I think. You could show someone anything in life, how to fish, how to work on a car, unless you do it for yourself and kind of make your own. Good example is like I taught my son how to mow the lawn, and I come out one day and he's drawing like X's in the yard. And I'm like, why are you doing it like that? And he's like, well, the way you showed me, it's not practical. So I'm doing it my way. And I think this is faster. So I let him go, and he ended up missing half the lawn and going back over it. But he was trying to make it his own, is my point.
No, I love that. And also an example you shared with me the other day, and maybe you could share with everybody here. You talked about how you put a chart out there and told everybody to draw a trend line. I thought that was pretty interesting, and talk to everybody about the results that you got from that.
Yeah, so when we had that initial chat room from School of Trade, this was before order flow, I was noticing everybody was number calling. Everybody called out a different number. So I said, there's 60 people in the room. Here's a chart. I'm going to draw a trend line on it, one trend line. Take the same chart, everybody draw a trend line, and then hand it in at this time. So I think 20 people participated, and I think 4 trend lines were the same as mine, and the rest of them were completely different. So right then that told me that basically why there's a market. Everybody is doing something different. There's people buying, selling, 100 different places, up and down. And that dawned on me, like, you have to be creative and make it your own. Like, you can't copy anyone because there's only so much I could tell you to make you draw that same trend line as mine, because that's my eyes that are looking at the chart that drew that trend line.
Do you remember the moment when you started to believe that you could be a full-time futures trader?
Well, the first year when I was messing around with the fibs and stuff like that, I created some indicators, and I I actually did okay. I didn't really lose that much money until I started to mess with the order flow, and I gave myself a certain allowance, and I kind of worked myself down to pretty much bare knuckle, and I stopped for about a month. I put everything aside, and I had to figure out, what I needed to do to make this kind of like a rule-based strategy. Because what I was doing was just kind of scalping in the middle of nowhere, kind of all over the place. So I figured out, number one, you need a location. Then number two, you have to enter that location. And then number three, you have to manage that entry.
So at that moment, you basically felt that you had built something that you could now go in every day and trade the markets and ultimately be able to do this full time and not have to go back to working.
Well, took about 6 months of that before I saw any kind of profit potential. And it was constant tweaking, discovering locations on my market, which is crude oil, learning its personality. And once I started to do well at it, I added this other account onto my strategy, which lets me hedge my position, if you will. So once I added that to my strategy, I started to become a little more profitable. And, I tweaked my strategy for a good year until I saw a good return on it.
You said crude oil is your market. Why is crude oil your favorite market?
Well, that's something that I started with. So I'm kind of a firm believer that you need to master something. I see a lot of people going from market to market. What do you think I should trade? They're asking everyone else. My advice is to, pick something and stick with it and learn it. For order flow, I find crude to be very readable. And I also trade ES too, but crude is definitely my favorite.
I know you're a scalper, but why do you choose to be a scalper?
Well, when I started with the other stuff before the order flow, I used to hold trades, and the rotational movement of crude oil would just bug me out because I would be up 100 ticks, and I would set, a target like everybody does. They try to forecast above, and I think it's going to this price, and it would go 75 ticks back, and my trail stop would get taken out. And I gave out all this profit, and my stress level was through the roof. So I started shorting in my trades. Anything under 50 ticks still was bothering me. So I went down to 30, 20, 10. And unless I'm in the market full time back and forth, I get anxiety because I don't like to give away price or capital. But that's my personality, 100%.
Yeah, see, I think for everybody out there listening to this, and Ben, like myself, we've all gone through these times where you go into the business, you find some strategies that you like, you test them, you trade them. Then all of a sudden you're struggling with time frame. How long do I want to hold? And then you narrow it down and then you hone it in to what you're most comfortable with, right, Ben? I mean, you have to be comfortable with what you're doing. Just because somebody says this is the right thing to do or other people are making money doing something does not mean that you will be successful at it. It's very personal.
Yeah, absolutely. And I found that out pretty quick in the game. And I think it's very important that people discover that about themselves. So if you could do drills for yourself, you could start on bigger charts, hold trades, shorter time frame charts, get rid of trades. You have to kind of feel where your comfort zone is. And most people, I find out, they're more uncomfortable when they're up a tick than when they're down 3 ticks. So if that's the case, that tells you a lot about your personality, and that's a good analogy you're probably a scalper then.
Yeah. I want to dig in and talk about your process here a little bit. First off, I want you to explain to everybody real quick, if you could, what is advanced order flow and market mapping?
So I call it advanced because most of the stuff I see out there is one-sided, which means People sell footprint charts without the resting order flow information. People sell dome charts without the footprint. So it's like back and forth. It's like you're getting half of the information. So what I put together is like the full information, your full dome, what's available to sell and to buy, and who bought it and who sold it. So to me, that's a little more advanced than what most people are doing. And then the mapping part is a rotational method that I use to manage my trades and to find my locations.
Okay, so we're going to talk about entries and exits here in a moment, but for this advanced order flow and market mapping, are you using any automation or maybe even an algo for notifications of things that you want to be notified for that are happening in the market?
I did start building algos about 4 years ago, and I do have 3 of them that I run. One's a shorter term, a medium term, and a longer term. And so I do okay with them. I don't really have them on full bore as I want them, but they're not influenced on my discretionary trading. They're a separate entity. I spent a lot of money, time, and effort getting them going. I probably haven't even made back what I've spent to get them going.
Just to be clear, those algos that you've created, they're actually automated trading strategies. They're trading for you.
Correct, 100% automated, set times. The short term takes a certain border flow anomaly that happens, and it gets out real quick, and it does that all day long. The medium term works on rotations, and the bigger term tries to capitalize on the actual trend of the move. And that kind of one usually hedges the other one. So if 2 of them have a bad day and a crazy move up, the longer term algo usually covers the losses from that, and either I break even or have a few $100 plus on that.
All right, let's talk about your point and click trading. Talk to us about your preparation before you begin to trade, and talk to us about what time that you begin trading if you are beginning to trade at a regular time on a day in, day out basis.
So I was always a firm believer of kind of like not sitting here all day. I see people like sitting here from like 6 a.m. to 4 at night, and I did it for a while in the beginning, and my legs started to hurt. I started to get headaches. So what I did is I put all my trades together, and I started to notice that my best performance was in the morning from 7 to like 9, 10 o'clock. So then I started to trade from 7 to like 12, and then I'd go to the gym and do whatever and be done for the day. And then narrowing that down to actually this year, my performance was still better from 7 to 9. It starts to fade tremendously after 10, 11 o'clock. So now I just trade from 7 to 9 in the morning.
So you're trading from 7 to 9 in the morning. What are you doing prior to 7 a.m. to prepare yourself for the day?
I don't do a lot of homework. I don't believe in all that. I always say that futures are called futures for a reason. It's, they're not, statistics and stuff from the past can work and stuff like that. But I don't want to base, something that happened yesterday on something that might happen today. So I come in, and the first thing I do is I locate where the longer term people are trapped. So I'll look at a 30-minute chart or 15-minute chart, and I'll see where more buyers are up top, prices coming back down through the middle, and I'll recognize that they're stuck. So I want to start looking for possible entries to get pullbacks into short positions to fade their stops coming down.
Let's focus on an entry. We've talked about advanced order flow and the market mapping that you're doing. Give us an idea of a trade example of an entry, how you determine your stop, and then how you would determine your targets. Are you scaling in all at once? How does that work?
Okay, so when I come in the morning, like I said, I look for an obvious top or bottom where I think people are stuck in one position, like over yesterday's high or yesterday's low. So let's say, for instance, if they're stuck over yesterday's high and we come back underneath structure and they start to build, which is like a profile build, once they get under there, if you start getting downward pressure and they start peeling off on the stops, which means, once you're long, the only way to get out is to sell it. Once I get an entry opportunity, then I can start selling down with the first account. And then what I do is on my second account, I start buying back on the way down.
Explain that you're using two separate trading accounts?
Yeah.
Talk to us about that.
All right. So if you're short one account, let's say I take 5 contracts, just for an example, and I buy 69.30 on crude, and price goes to 69.35. I'll take 3 off at what I call the bulk spot, which is 5 ticks, and then I'll hold the 2 for our next rotational move up. So if price goes to 69.40 and I get my entry, I could sell with my other account while I'm holding my long still on the 2 contracts.
I'm curious, why are you using 2 different accounts? Is it a psychological thing that you're doing, or is it a technical thing? I'm not sure I'm completely clear as to why.
It's more tactical because what happens is as I'm going up and price is going with me, now I have my trade long I'm in profit, and now I could sell against it on these smaller moves down, so I can take profit on 2 different entities on the rotation on the way up. I could take advantage of the selling, and I could still hold the buying on the way up. Now, in the case that I lose and price goes up and I fail to get that short and it just goes right through my stop, I have an 80% coverage from my long contract that covers that short sell.
How are you determining stops?
My stops are based on just my overall performance, overall, like what I've been able to do as far as a precision entry. So my stops are usually 5 ticks, but I can narrow them down to even smaller when I can read the order flow even quicker. So I'll get like 2, 3, 4 ticks on those precision entries if I need to.
Are you fluctuating your entry contract size, or is it always the same?
No, I fluctuate. I have a little algorithm built that tells me the day's average bid and ask. So I fluctuate based on that size and also the direction. So if more people are stuck short, I'll buy more from them and vice versa.
Do you have a process that you go through to adding additional contract size? Like, how do you get bigger?
So what I did in the beginning was, and I think a couple of people went over this before, but what I like is basically you start with 1 or 2. And if you can make money with 1 or 2 with a certain strategy, on a 1-to-1 R, which is basically same stop, same target, all you have to do is add size. So if you can make $100 a day, you can make $1,000 a day with 10 contracts versus 1 contract with the same strategy. So to add size, what I would do is every $1,000 I make, I would add 1 contract. Every $1,000 I lost, I would take 1 off.
Something that you mentioned, I want to talk a little bit more about. You said that you identified your peak performance at specific times. How did you do that? Was that through a journal, or was that just through you feeling that at those times you were trading better?
No, it's through the stats that the platform offers. You could bust it down, and it'll basically tell you, your shit from here to here, and your golden from here to here, and you could put in amount of date. And you could look back as far as you want on it. So it's just a performance, log. And what happens is you have a lot of adrenaline flowing when you first start, and if you could tunnel that into, to help you in the morning, it's kind of like going to the gym. Like you can only work out for so long before you get tired. So I kind of noticed that I would trade really well, and then my mind would just go. I would get tired and settle down, and then that was it. I had to put it down.
Yeah, it brings me back to the old days for me on the trading floor. I mean, everybody came in for the open. We traded the first hour or two. Everybody took a long lunch, and a lot of people came back for the close. If you were up good money or down your risk limit, you didn't come back. And I really always stuck with that myself. I always felt that there was only so long I was actually making really good decisions. And like you said, once you start to get tired, those decisions, your decision making starts to wither a little bit. And that brings me to the next thing I want to talk to you a little bit about is trading psychology. Do you do anything to help you with trading psychology?
Well, I was big on that in the beginning, even just learning about my body and my body's reaction. I used to wear, a watch and take my pulse, and you could kind of learn a lot by yourself if you discover what really goes on before and after during a trade. And most people don't even have any idea that this happens, but your body floods with cortisol, which is a stress hormone, and then your body either does a flight or a fight response of adrenaline. So most people get the flight response, which shuts down their motor skills, their muscles, their eyesight, and basically you run away and you start making bad decisions. So if you can harness yourself to fight back, what happens is you actually get smarter, your muscles get bigger. This is like a DNA preservation of self back in the caveman times when, you come up against a lion, you swell up, you make yourself look bigger. You see it in a lot of animals' defense mechanisms. But it's amazing how much that comes into play in trading.
So are you doing anything outside of trading, like meditation, exercise? I play a lot of golf. I think it helps me a lot. I also really enjoy it to help you with your trading mindset.
See, golf stresses me out because I'm almost as good as I think I am. But I try to just eat right. A lot of people, you want to eat right. You want to get enough rest. I don't need a lot of rest. I only sleep for 4 hours. That's all my body lets me. Get the right supplements in, the nutrition from food. Just be at peace with yourself, man. If you have kids, you spend a lot of time with your kids. You don't anything outside of trading that creates stress is just going to come back and haunt you during your trading because it's always going to be in the back of your head. So you have to kind of empty that trash before you start every day.
Yeah, I agree with that. And I said something the other day that got a lot of conversation going on Twitter. And I said that I think that being disciplined is probably the most abused rule that people talk about on Twitter. And I think that most people really don't even know what it means, especially new traders. I know from my own personal experience, when I learned about being disciplined, when it was taught to me from other pit traders, I thought it meant just be disciplined to a strategy. And hearing you talk, and I think you're going to agree with me that it's being disciplined to a whole process that goes involved with trading. It's not just about being disciplined to your strategy. Like you said, it's about eating right, knowing when you shouldn't be trading because you're mentally not in the right place, just understanding everything about yourself and going day in and day out, discipline to that process, I think is what ultimately helps you as a trader.
Yeah, 100%. I mean, there's a lot of people that think they're disciplined and they do karate or they do other things and they're like, well, that's how I learned discipline. But at the same time, they get in front of a chart and something doesn't work for them and they change it, or they're just not disciplined enough to even realize what they're doing. And I think that's a big part of discipline is recognition.
Oh, totally. Something I want to see if we're on the same page on this is that because I believe in that, because I believe that there's a process I have to be disciplined to every day. And I'm also someone who believes very much in how I am feeling is going to affect my performance. So I don't have trading rules. I've written a post about this. It's on my website on the blog. If you guys want to read it, it's called I Have Trading Instincts, Not Trading Rules. Do you have trading rules? Do you have instincts? Do you have guidelines? Is there something that you follow day in and day out with your trading?
Not at all. And I'm 100% with you on that. And I kind of feel like it's a gray area because if you do too much to harness yourself into one thing, you're stuck with it then. So you have to have a little wiggle room in your thinking process, just because of the way the markets change and things that change day to day and what you're doing. You can't be just so concrete in everything, because the market is by far not black and white like everybody thinks. Everybody comes in and they think there's some signal that happens, and they just go to the bank and take money out. Like, that's the exact opposite of what happens.
No, yeah, it's so true. And something I want to close out on here before we get into rapid fire is, at the beginning we talked about how you had, we'll call it a bad experience with how you started to learn about markets. You felt you were misled a little bit, and you and I were very active on Twitter, and we both agree that there's a lot of good and bad on Twitter, but in many cases, a lot of new traders are being misled. What are your thoughts about Twitter?
It comes down to like an ego show, and I guess, I'll say I'm guilty of it myself, because we all like to conversate in this lonely game, and it just turns into, I think once you earn the right to kind of be that person, then that's fine. But when you're starting out, it's detrimental to your trading, because you're just looking at the next guy to the next guy to the next guy, and you have no idea who's who's being funny, what's a parody, who's real, who's even, like, some people could be just on throwing curveballs and telling you the wrong shit just for their own personal satisfaction.
Great stuff, Ben. I've got some rapid fire questions if you're ready for those.
Sure.
All right, everyone, our rapid fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. BLB, first question for you. What traders influenced your life the most, and why?
Just the guy that I learned the order flow stuff from, and he put me in perspective of what the market actually does. The guy that got me into stock trading was a friend of mine, so I have him to thank. I appreciate everything you do in this business, and that's it. I thank myself because I put in the hard time and the hard work, and I figured it out for myself, and that's it. I don't know any of these people on Twitter. I ain't gonna thank any of them. So that's as far as I'll go with that question.
What was one of the hardest things that you've had to overcome in trading?
Trying to outsmart the market, trying to think that I could figure it out. I'm not an engineer. I'm not a doctor. And I think those people have the hardest time trading. But that was the hardest thing for me, is I was always looking at the chart right to left instead of looking at it live. And I was trying to outsmart it, and it just outsmarts you. So unless you know how it works, the ins and outs, it's probably always going to do that.
How has your trading process evolved over the years?
I think it's become more methodical, as far as I don't need as much to trade. When I first started, I needed all this information, the bid and ask, and like depth, and you adapt to where you can almost read price and kind of, it becomes just a normal day, everything. You're either right or wrong. So the adaptation is basically, building algorithms and then kind of using less and less on the chart. And I'm still learning. Like, there's always things that I like to learn, but I try not to look at anything other than, anything order flow related.
What is one attribute that you believe every trader should have?
Confidence. And that doesn't mean cockiness. You don't want to go on Twitter and start tweeting the first $1,000 you make. You need confidence to execute. You need confidence to exit. So you have to believe in yourself and what you're doing, because the second you second guess yourself, to me, you see a lot of people that I call them weak, not as an insult, but when people are going around trying to figure out what everyone else is doing, that you're not confident what you're doing. So that's the main thing that I would say.
What's your favorite book about trading?
I never read one. And probably never will.
Well, what's your favorite movie about trading?
I like the comedy side of Wolf of Wall Street, if I have to say one.
What's the best piece of advice that you've received about trading?
Basically, just be humble. You got to know your place. Let the process work for you. Kind of don't get into this business if you have to pay your bill at the end of the month. Just take it slow. There's no rush. A lot of these people get in and they're eager to drive cars and make all this money. It's the total opposite of how it works. This is not realistic.
If you could give a piece of advice to the younger you, what would it be?
You want to learn the market from the inside out. A lot of people learn, how the market works after the fact, after they learned about profile, moving averages, trend lines. Learn your order flow first, learn why the price moves from A to B, and then build your strategy based off of that.
Last question for today, Ben. Favorite thing to do when you're not trading?
I go fishing, and then I like to hang out with my kids all the time, man. I'm big into my kids. I believe family is 100% the reason that I'm here to do this. And so that's what I do. I hang out with my kids, and I go bowling on Thursday nights with my friends. Play golf. We do a lot of motorsport stuff, dirt bikes and daredevil stuff. So,
Ben, where can people find you on Twitter and a website to check out?
It's BLB_capital on Twitter, and then I have a blog, BLBcap at blogspot.com. It's just some overview stuff of things I put together over the last couple of years.
Ben, we've been speaking on Twitter for a couple of years now. It was really great having you on Futures Radio Show today, man. Thank you so much for joining me.
I appreciate it, man. Thank you.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.